Welcome everyone. In today's video, we're going to be continuing on with the Forex Beginners Trading course. For those of you guys who do not know, we have been producing the curriculum that is corresponding with the babypips.com Forex Beginners Trading course curriculum that they have over on their website, over here on the channel in video format, adding some personalized tips from my personal trading experience. And then once we're finished with this course, because of course I want to get down a good base fundamental piece of content, a full piece of content constructed through all of these lessons. For those of you guys who have never even heard of the market that want to go through from A to Z and learn through a video format, with that corresponding curriculum relating to babypips.com. So if you don't know, we are leaving the links in the description to the corresponding pages on their website that have to do directly with each lesson that we discuss. So if you want to check out a text version or just go through and compare or just review the information, go ahead and check out their website. It's a really great website that has a ton of educational info and other tools that help you learn and trade the markets as well. So if you guys are new to the channel, I would really appreciate it if you guys decide to subscribe and stick around for more content. But for those of you guys who are have never heard of Investors Elite, we focus on comprehensive financial education for traders, and we actually are planning on launching a free weekly newsletter dedicated specifically to traders, investors, and entrepreneurs like myself that want to kind of get a deeper dive into the world of trading and investing and entrepreneurship and what it takes to be successful in that area. So I will be leaving a link in the description to get on the waiting list. We are going to be launching it a little bit later this year, but for those of you guys who are interested, I just wanted to put that out there. Again, it's completely free and it will remain completely free permanently for the entire future that it is alive. And it's a business that I'm planning on really ramping up once we get started and over the next few years. So let's go ahead and get started with this lesson. Who trades Forex? So in the last few lessons, we've been kind of moving into getting a little bit more in depth about what we're actually looking at within the foreign exchange market. And in this lesson, we want to look at how the market actually breaks down, who participates in the market, and how that's kind of broken up and who kind of answers to who. So let's go ahead and get started with Forex market structure. So for comparison purposes to start off, let's first take a look at a market that most people are familiar with, which is the stock market, right? Most people are familiar with the stock market in one way or another. They kind of go over the fundamentals of the stock market in high school, at least in my high school. And I know all around the world there's different stock markets in different countries. So hopefully you're familiar with the stock market because we want to take a look how a structure of a stock market is broken down. So this is how the structure of the stock market looks like. So it's a centralized market. That's the first thing you should notice. It is very centralized. So buyers and sellers basically both have to come in to the center. And babypips.com made this graphic and they called it the master of the universe, one price and control on the spread. So basically that's going to be like the NASDAQ or the New York Stock Exchange. They control the prices and the spreads and any fees associated with trading in that market. So it's very centralized, one party basically controls everything and has the control over everything. Can decide on different things like circuit breakers, if they want to shut down for holidays, anything like that. It is very different from a decentralized market like the Forex market. So as you can see with the stock market, it's very monopolistic. So there is mainly one entity that controls prices, and all trades, as we just mentioned, must pass through that one entity. And because of this, prices can easily be altered to benefit the specialists rather than the traders. So the people at the top, the hedge funds, the big funds, even the government, people that are inside Wall Street. That's why there's kind of this negative notation with Wall Street, because over time there have been things that people have been quite skeptical of, that have been maybe even on the verge of illegal, that takes place in Wall Street, because they're looking to fill their pockets and get rich off of, unfortunately, the backs of hardworking Americans a lot of the time. Not everybody on Wall Street, but that has been a negative connotation that has built up over time. So in the stock market, the specialists are the ones who fulfill orders of its clients. So for example, stockbrokers, funds, etc. We just talked about some of them, putting them in control of prices and transaction costs in many cases. Back in the day when there was no internet, in order to purchase a stock, you had to call up your broker and put in an order, and there would be a transaction cost just on them buying a stock or selling the stock. So let's say you want to buy one share of a $10 stock. Sometimes there would be a $10 fee just to buy that stock. So it was very much so, obviously we talked about monopolistic, but it was so controlled by these entities. It has gotten more decentralized over time, just because of competition and the internet, which has evened the playing field a little bit. But there were very large transaction fees and a bunch of hidden fees as well if you were to invest with a fund or anything like that. And a lot of times brokers would do things like pitch these garbage companies to people that just wanted to invest in the market but didn't know what they were doing. So again, very centralized market, not exactly where you want to be when you're looking to trade and invest your own money with the goal of growing your wealth while avoiding as many fees as possible. So an example of this, if there is suddenly a surplus of sellers and a low amount of buyers, the specialist can prevent this by simply widening the spread or increase transaction costs to prevent sellers from entering the market. In other words, manipulation to benefit the middleman. So trading spot Forex, as we mentioned before in some previous lessons, is decentralized. Okay, unlike in trading stocks or futures, you don't need to pass through a centralized exchange like the New York Stock Exchange with just one price. So the Forex market allows for no single price for a given currency pair at any time, allowing various brokers to compete for the customer. So we kind of mentioned this in the previous slide, right? Competition breeds the best situation for the customer. And that's in any industry, in any business. The more competition there is, the more each business is competing to offer a more valuable service or product in order to acquire that customer that they're all looking to acquire. So competition breeds low costs, and in some cases that may be near zero. So this is kind of a picture of what the decentralized Forex market looks like. So we're going to talk about each of the people that are in, or the entities that are in this market and captured in this picture. But as you can see, it's very decentralized, right? There's people at the bottom. You can see this is kind of a joke picture from Baby Pips, of course. They do have a great sense of humor over there. Shia LaBeouf, Warren Buffett are basically on even playing field with large banks, Reuters Machine, ECN brokers, anything like that. Everybody is mainly on an even playing field. So the foreign exchange market is so large, causing the competition between dealers to be so fierce that you get the best deal almost every single time. And that is, of course, if you're trading on some sketchy broker that offers 1 to 3,000 leverage or something like that. But we're going to talk about that and how you can completely avoid that and never get caught up in a sketchy broker, because with a decentralized market, there's a ton of competition. So you have a lot of choices, and I'd say 70%, 60%, 80% of those choices for brokers are going to be taking more of a cut away from you, either in hidden transaction costs or larger spreads, compared to the top brokers that you want to really be working with. So the Forex ladder, just because the Forex market is decentralized does not mean it isn't organized. So in a moment, we're going to take a look at the ladder. But the market can be simplified into a hierarchy that starts at the top with major banks and makes it all the way down to you, the retail trader. So this is what the hierarchy looks like. We have major banks at the top, electronic brokering services or EBS, Reuters dealing 3,000 spot matching as the second placement, medium-sized and small banks, retail market makers, retail ECNs, hedge funds, and commercial companies. And then we have retail traders. So it's actually interesting because retail ECNs and retail market makers used to not be a thing when the internet wasn't around. So you actually weren't able to participate in the foreign exchange markets before the internet really came around and got its start into the market. So at the top, you have the interbank market. This is composed of the largest banks in the world with some smaller banks which trade directly with each other in massive amounts or go through the next layer, EBS or Reuters dealing. So Reuters dealing and electronic brokering services, or EBS, could be compared to the rivalry between Coke and Pepsi. So they're basically kind of like brands in this market, and they are constantly in a battle for clients and continue to one-up each other for market share. So like I said, competition is great for a market and really enforces that decentralized nature and that free market that we're all kind of looking for. We really all truly want a free market, and a lot of people believe the stock market in the US or any other country is a free market. Well, it's not. And we discuss some of those reasons as to why, and there's tons of other reasons, but that's why I try to focus on the foreign exchange market because it is so decentralized in nature, and that's where I like to trade and invest my money. So even though both companies offer all of the same pairs, some currency pairs are more liquid on one brokerage than the other at different times. So it really just depends. Again, they're always one-upping each other, so it's kind of always a competition that continues. The medium-sized and small banks are next, and they view rates from the above parties. However, getting the best rates depends completely on that bank's credit relationship with the trading party. So similar to you asking your local bank for a loan, the better your credit standing and reputation with them, the better the interest rates and size of the loan you can acquire. Next up are hedge funds, corporations, retail market makers, and retail ECNs. So since there is no credit relationship with these participants in the interbank market, they have to do their transactions through commercial banks. This means that their rates are slightly higher and more expensive than those who are part of the interbank market. And last up, the retail traders. So in the past, it was very hard for retail traders to engage in the foreign exchange market until the expansion of the internet, electronic trading, and retail brokers. So the barriers to entry in Forex trading have all been removed, giving everyone the chance to trade alongside the higher ups. So actually in one of the next couple lessons, we're going to be discussing the history of Forex and kind of how retail traders made their way into the market. And you should all be very glad for that, or else we wouldn't be sitting here today. And that is the last step of the hierarchy, as we can see there. And just to review, we have the major banks at the top, EBS and Reuters dealing second, medium-sized and small banks third, and then that layer of retail market makers, retail ECNs, hedge funds, and commercial companies, and then lastly, us, the retail traders. So just wanted to, again, go over the hierarchy and the way the Forex market is structured. And if you guys start to really understand this, and hopefully you do after this lesson, you can start to see the benefits of trading in the Forex market just from this viewpoint. So hope you guys really enjoy this video. The next few lessons are some of my favorites because we discussed the history and kind of some of the different things that correlate to the history. So hope you guys enjoyed this one, and we will see you guys in the next lesson.